In this video, let us talk about two small cap stocks which are at a very interesting stage. Now, the first stock is also in the semiconductor sector and has already entered a bullish phase, rallying almost 24% in just 1 month. And looking at its recent strong results, it has the strength to continue this rally even further. Now coming to the second stock, it is currently in a consolidation, quietly building momentum. And if you take a look at its last 2 to 3 years of performance, it has consistently shown amazing results. So this one looks ready for a strong breakout anytime soon and can show a powerful rally. Now both of these small caps are standing at a point where we can say that this could be a once in a lifetime opportunity to buy them at these levels. So in this video, let us understand why these two small caps deserve your attention, what are the risks and the rewards, and most importantly, whether this is the right time to act before the next big move begins. Now let us talk about the first company, which on the surface is a specialty chemicals manufacturer. But if you look closer, it is a multi-bagger transformation story as they are slowly moving towards the semiconductor industry as well. And in their latest quarter, the company grew its revenue by a solid 24% year on year, reaching 306 crore rupees. Now that is good, but here is where it gets interesting. Their profit after tax did not just grow, it shot up by 91%. But how does that happen? How do you make your profits grow almost 4 times faster than your sales? Now this is not a magic trick. Here is how they did it. The company executed a master stroke. They deliberately churned their portfolio, which means throwing out low margin products to focus on high value specialized chemicals. And the result? Their EBITDA skyrocketed from 19.8% to 31.1%. So that is the kind of operational excellence that turns good companies into great ones. And that is the kind of excellence I would aim for my company as the founder of Rangavan Finance. Now this small cap rocket stock is Acutas Chemicals, and it has a multi-stage engine as they are aggressively diversifying into new and high-tech areas like battery chemicals and semiconductor chemicals, which are one of the fastest growing sectors of the future. They have even started a joint venture in South Korea, which is expected to start generating revenue from the second half of FY 2027. On top of this, when you look at what the management of Acutas is saying, it really builds your confidence. Like the chairman, Mr. Naresh Patel, has mentioned that their focus has always been on building a long-term and sustainable business rather than chasing short-term opportunities. So this tells you that the company is not just running after quick profits, they are thinking of creating lasting value. And at Rangavan Finance as well, we believe in creating lasting wealth through such amazing companies. And here is something even more reassuring. In their latest con call, the management has clearly stated that they are expecting around 25% revenue growth for the full year. Now, what is impressive is that in the past, every time when they have given such guidance, they have always delivered on it. So when they say this again with confidence, it is a strong sign that the upcoming quarters are going to show solid results, which could drive the stock further on the upside. And from a technical standpoint, it is important to note that Acutas is a small cap stock, which inherently carries higher volatility and risk. Therefore, it is better suited for long-term investors with a holding horizon of minimum 2 to 3 years. So at present, the stock is trading near its all-time high, which makes immediate entry less attractive. And as a risky investor myself, I am planning to build positions gradually, slowly and gradually in the 1635 to 1682 rupees range. And yes, if the stock corrects further near 1311, then here I will build positions more aggressively. And for the conservative or the safe investors, the ideal accumulation zone would be around 1311, as this would give you a more comfortable risk to reward setup. Now, it is crucial to emphasize that I never deploy my entire capital at once. Instead, I keep additional cash reserves to average down in case of price corrections. Now, this multi level or phased investment approach helps me manage volatility and maximizes my long term potential in a fundamentally strong yet high risk small cap stock like Acutas. Now, let us shift gears from chemicals to homes and look at our second company, Aptus Value Housing Finance. Now, the simplest way of growing your loan book is to give small size loans to first time borrowers, and this will increase your market share and also increase your brand awareness. But Aptus did something that might surprise you. In July of this year, they made a bold decision. They stopped giving loans below 7 lakh rupees. In a country that is always hungry for credit, you might wonder that why would a finance company turn away its customers? Well, the management has made or explained it very simply. They said that they have made this decision with a specific purpose. They want to focus on better or higher profile customers. In their words, the goal is to shift towards customers with ticket sizes of 7 lakhs and above to improve the overall customer profile and reduce the risk of bad loans going forward. So essentially, what they are doing is focusing on quality over quantity, aiming for stability and stronger long term growth instead of chasing volumes. Now, let us talk about the results. So, in this quarter, Aptus delivered a strong performance. Now, their sales grew by 29% and profits by 24% year on year, reflecting solid execution and demand momentum. And the management remains confident, guiding for 25% plus AUM in the medium term, with a clear target of hitting 25,000 crores in AUM in the next few years. And remember, as the AUM grows, the stock price is likely to follow the lead. What's even more encouraging is the strategic expansion beyond South India. Aptus is now entering newer markets like Maharashtra and Odisha, making them or transforming them into a pan-India player. And during this quarter alone, they expanded their branch network to 321 locations, including 20 new branches, which strengthens their reach and sets the stage for long-term sustainable growth. Now, I have strong conviction in this stock, and that confidence comes down to two simple reasons. First, capable management team, and second, consistent performance every quarter. Now, the company has been executing exceptionally well quarter after quarter, and that builds real trust. But here is where it gets interesting. Despite the strong fundamentals, the stock price has been consolidating and the valuations have come down. But for me, that is not a concern. That is an opportunity, because when a fundamentally strong company trades at low valuation, it often sets up for a powerful comeback once the momentum returns. So right now, the stock is trading about 20% below its recent highs, which places it at attractive levels for long-term investors. However, I am not rushing in or buying in bulk. I will be building positions systematically, which means slowly and gradually. Now, the zones around 310 rupees and 288 rupees have historically acted as strong support levels, and those are the areas where I will be looking to building positions systematically, keeping a long-term perspective in mind. Now, both of these stocks are fundamentally strong and currently positioned at a stage that might not come again anytime soon, which makes them once in a lifetime kind of stocks. Now, Acutas is already riding the strong bull phase, and Aptus is showing early signs of a potential breakout. So, two powerful stories, each riding its own growth path. But here's the real question: which story fits your investment journey? Drop your thoughts in the comments below. I would love to know which stock you are closely looking at. And as always, if you found this video or this analysis helpful, then give this video a thumbs up and subscribe to Rangavan Finance. And this was Sanika from Rangavan Finance, and I will see you very soon in the next one. Bye bye.